So we're going to get numbers for all the auto companies, I guess, for the fourth quarter before the day's out. But let's start on Tesla because they beat expectations.
Right, 112,000. That puts them above the 360,000. That was the low end of their guidance for this year. There's a lot of skepticism, especially early on in 2019, that they were going to be able to come anywhere close to that because they had a really disappointing first quarter. Second quarter was a little bit better, and then they had record third and fourth quarters. It's a real legitimate question whether or not we may see something similar in 2020 because we have a situation where the U.S. and countries like the Netherlands, China, they're either taking subsidies down a little bit or removing them altogether. Here in the U.S., you don't have a federal tax credit. A year ago, we were talking about that going from $7,500 per vehicle down to $3,750. It's now nothing. So this is a company that is showing some real progress, has some momentum. But as we saw last year, the first part of every year is a seasonally slow time for people buying cars. And so we shouldn't be surprised if they have a little bit of trouble on that front.
Well, and that's my question. Is the issue right now with Tesla supply or demand? Because for a long time, there was a concern they couldn't get them out the door fast enough. They couldn't produce them fast enough. But then earlier, we heard just this week, we heard some people saying, I'm not sure that people want that many electric vehicles.
Right. And supply-wise, they're going to be fine because one of the ways to answer that question for them is starting production in China. They have a plant outside of Shanghai that they said in this morning's release that has demonstrated 3,000 units per week capacity. Demonstrated ability to versus actually doing it is a matter for some discussion. Just within the past week, they've talked about being able to do about 1,000 units and actually doing that. So that's going to be a serious factor early this year that maybe will help them sort of offset the seasonal weakness in demand. But there are some real sort of debates among analysts of whether or not there is some saturation issues. And you're certainly seeing that with the Model S and Model X, the much higher price vehicles. Those have struggled for quite some time now. Really, the demand is sort of centralizing around the Model 3.
And to keep up that demand over in Shanghai or in China, they've actually cut the price on the Model 3, which is something I think Elon Musk said he was going to do, but they've done it now.
Right, and that was something that we really sort of expected. Our team in China in the last couple of weeks has written about the idea that as they localize more of the content for those vehicles, as they're able to bring down costs, and sort of get over the hump of getting that factory up and running, bringing the cost of those cars down and being able to sort of unlock more demand from that market.
Yeah, that unlocks demand. What does it do to margin?
Good question. But we've heard Elon Musk say that they're going to put greater priority over scale and and emphasizing deliveries over profitability. We'll see if he's able to balance that in the next few weeks for the fourth quarter.